It should be up there now. Okay. And I've also uploaded the workbooks for you. Alright? Just to make your lives easier. Another thing that you could do, just in case you don't want to print it out, is you could download it and then just transfer it into a Word document and then work on it on your PC. That's another option that you could. Alright? Because I'm sure printing everything might just be quite costly for you. Alright. Awesome. So let's proceed. Let's proceed. So I want us to start with 2016. Yo. They'll never tell you reverse that. You must know I knew it. But if they give you general. So remember, this is 2017 and 2016. It could be more than that, it could be less than that. It could be more, well, typically not less. But if you look at other papers, you really have high. Consistent, they split it more. It makes sense. But it's going to be 60 months. Right, so guys, does everybody have 2016 in front of us now? Alright, so question 1 is all theory. Okay? It's multiple choice. Guys, don't take these multiple choices for granted. Some students, yay. They get maybe 1 or 2 out of 10 multiple choice questions. Yeah, they didn't study. Hey, no. If I see that today, it's not the because the theory that you would have to know through the journals is the theory that they then ask. Does it make sense? See, you remember every time I said the beautiful thing about accounting. So, you have seen. Anyway, let's proceed. So, question 1 we're not going through together. We want to jump straight into question 2. And question 2 again is one of the journals. Okay. So again, here they're telling us all amounts are inclusive of that, unless told otherwise. We only trade with that vendors. They want us to do the month of March. We're operating under the perpetual inventory system this time. All right, the markup 50% on cost. All right, 50% on cost. All right, so immediately you see that somewhere on your paper, do yourself the favor of scribbling your model C plus P is equals to SP. And again, we know automatically profit is 50%. Then what else do we know? Cost is what? Why is cost 100? Why is cost 100?
Because that's the amount you have to pay for it.
Because they said it's on cost. Guys, alright, this by now we should know. Okay? Because it's on cost, cost should be 100. Right? Don't assume cost is always 100, guys. I've seen that mistake too many times. Okay? Alright. Alright, we have our model, and let's proceed with our question. Then they're also just highlighting to us that question forward. I hope I did. Just want to double check. Alright, cool, no problem. Alright. And then they say that DIN, alright, stands for duplicate invoice, DCRN, duplicate credit notes, DCS, duplicate cash slips, DR, duplicate receipts, JV, journal voucher, and then PCV, petty cash voucher, respectively. Okay, so you can see the letters switch around a little bit, all right, but typically they are quite similar. All right, then there, under required, which I should have done first, says use the relevant transaction from those given above to complete the following journals for the month of March 2006. You need not total the journals. Round all amounts to the nearest grand, and then there they're asking us to do the cash receipts journal and the debtors journal. All right. Cool. Again, just two journals. Okay. So then, at that point, we jump into the actual question, the transactions, that is. And then on the first, there it says additional capital contribution in cash deposited directly into the business's bank account. Okay? So that's going to affect your cash receipts journal. Okay, next one, cash sales of trading inventory. All right? That's going to affect, and there you can see under the source DCS, duplicate cash slips. So that's going to affect your cash receipts journal. Then, next one, credit sale of trading inventory. All right? So what journal is that going to affect? Debtors journal, trading inventory return. Which journal? Debtors allowance journal. We're not doing that, so we can cross out that transaction. Okay, just to save us some time. Receive the donation from C. Matthews. Where is that going? CRJ, yes. Okay, and again, you can just use your source to verify. Duplicate cash slip. You know this is cash receipt journal. Credit sale of trading inventory. Where is that going? DJ, debtors journal. Okay. Next one, cash sale of trading inventory. CRJ 100%. Next one, received rent income. CRJ received a check from E. Solomon in part payment of his account. CRJ, all right. Received 130,000, less 10% settlement discount from E. Conca and Jetta. With that, what's 30th? So there's a brilliant question over here with the transaction on the 30th. She's asking, is the general journal also going to be affected? All right. So yes, the question is 100% right. I mean, if the answer is 100% right, the moment you see settlement discount, whether it's received or it's granted, always is reported in the general journal. Okay. I'm talking about the settlement discount aspect. You must remember the payment in this scenario we receive, so we're receiving money. So what other journals going to be affected? CRJ. Everyone. No, it's not. Very good. Yeah. Not very good. Yeah. So the question she's asking is, settlement discount the same as trade discount?
No.
Why?
The settlement is when you pay off an account. Your trade discount would be okay. Let's say if you buy this amount of stock, I'll give you this for.
And you get it when?
When you pay it.
Okay. So you are 100% right. At the point of sale, when we agreed that I'm buying X amount from you, at that point is when you gave me the 10% discount. Does that make sense? And exactly as you explained, with the settlement discount, it's only when I come back. So I went and bought 5,000 worth of goods from you. And then I say, okay, and you gave me 5 months to pay.
Early, you can say, okay, if you pay early, I'll give you this percent.
Exactly.
So, but you only get the discount once you pay it.
Once I've paid.
With this is a trade one where you already agreed to it before.
Before I even leave with the stuff. Does that make sense? So that's why with the trade discount, we haven't bothered to report it in the general journal. Because it's happening at the point of sale. Okay? You walk into Nike and you see, oh, Jordan's on special. And you buy them. Okay? That is a trade discount. You're getting it then. Does that make sense? Okay? Settlement discount only when I want to settle my account. Do I then get it? So I'm trying to encourage you to pay early. I say, okay, we'll give you a settlement discount of 10% if you pay by instead of. Exactly. Does it make sense? Okay. Like I get why I typically have to re-explain settlement discount and trade discount, even after having explained it in earlier lectures. It's because I think when you actually start transacting, that's when you begin to see that, oh, these are not being treated the same. Is there a difference? So thank you for asking. Yes. Yes, you will get out. You won't need to do it. But that's why I was saying that I would like you to actually download the answer booklets. Because the answer booklets will save you time instead of wasting time drawing all this. Back in my day, guys didn't care for us. You had to draw these things. Alright? And that also showed how well do you know your story. Because to draw this and then say, which should I have analysis of receipts in my cash payments journal or not? Should I have debtors column in, you see what I mean? Already we're also testing. Therefore, you also be testing here. And here we're saying, basically, do you know whether it's that inclusive or not? That's really what we're testing. Okay, that's the stuff. You should already know what you should be or not. Okay. Alright, but let's jump into this. So we've agreed on which journal is affected by which transaction. Okay, and we're only doing the cash receipts, and we're only doing we're doing the debtors journal. So everything else. So can you see here? For somebody who's never done an aspect or might get intimidated, so I said they won't ask for so many transactions. They haven't. They've asked very few transactions. It's only that they've given you a lot just, but they are for other journals that you're not. So those follow. Okay? So yeah, don't be intimidated. Okay? So on the first it was a capital contribution, right? So that went straight to the bank account. Alright, and then obviously under sundry we report the capital. Okay? And then the next one, I think it was a sale, yes, duplicate cash slip. So that was a sale of trading inventory. There you can see under analysis of receipts. Somewhere, let's just quickly check. Did they say when we deposited money into the bank account? Did they say anything to that effect? They didn't, huh? Huh? The first and the 30th. Where did you see that? Oh, yes. Thank you very much, sir. Okay? So there, cash was banked on the 21st and the 30th. So can you see here? I didn't bank any cash on the 8th. Okay? And this is really a way for them to see. Do you know your story? Have you actually been practicing? Done various questions. Okay? What we do in class isn't all that you should be doing. It's the minimum. Okay? It's the minimum. Alright? Thing is, there's no point in overloading you guys, like as if you're not doing anything else. Okay? So I give you, the solution to obviously understand. Okay? So there we go. We didn't put anything there. We know that there's output that we owe to SARS as a result of selling. Then obviously we put the VAT exclusive. And then we have to calculate cost of sales. Okay? And we use that using our model. Okay? In that case, since it's not on the board, let's see if I can scroll down and maybe it will show. But if it doesn't, I'll just explain. Okay. All right. See how I did the model right there by the side. Okay. Because I know that I'm going to be using it throughout wherever I need to do cost of sales. All right. Then there's your calculation there for cost of sales. Okay. What we want over what we have times what we have right now. Boom. All right. Then the next one was what? A donation from C. Matthews. Can you see there under details? I just put the name C. Matthews. Okay, I don't need to You could have also put no, you shouldn't have. Donation should go on the other side. Yeah. Okay, 1,500. There's no VAT on donations. Okay, and there you go. 21st. This time we know we're depositing money. Okay, 21st we had cash sales to the value of 30,107. Right? Okay, then they said less trade discount. Okay, so we just said 92% of the amount that they gave us there. And that's how we get to 30,107. Make sense? Okay. Then, why do I have 158,000 in my bank account? Yes?
All of the money that came from the food.
100%. I couldn't hear you clearly, but I know it's amount. All of the money that we've been receiving prior to that date is also getting deposited. Does that make sense? So it's not only the money that was received on the 21st, but it's also the money that we received on the 8th, the money we received on the 15th, and the money that we received on the 21st. Make sense? Okay, awesome stuff. Yes. Why? Why is it that way? Well, just think about it from a business perspective. We want to have our money in the bank account because it's safer there. You know what I mean? Because it has security guards and all those stuff, capital, all those stuff. So, in actuality, most businesses, okay, depending on how much cash you actually receive, should actually be deposited daily. Because the more cash you have on you, the more risk. Because if somebody comes and robs you guys, how are you going to get that cash back? Does that make sense? Yes? Shouldn't be. Sorry, I want to get your question. Are you sure? Yes. Because they told us specifically when the question came up. At the bottom of all the transactions, they said cash was banked on the 21st. So here, here we have cash. So it means we actually so it went in the wrong. All right. Everybody happy? Can I proceed? Yes. When you have to deposit in the bank. Don't put it in the bank. The question will tell you cash was only deposited. They'll tell you the days when you deposit. Does that make sense? If they do not give you this, that means every day money was put in the bank. Okay. So, brilliant question. So her question is, how do you know when not to do anything with a bank card? Now, if in the question they give no indication as to which days you actually deposit money into the bank, then you can assume that the business deposits money into the bank every single day that it receives money. Does that make sense? So from the 8th to the 15th, we would have put that money in the bank column as well if they hadn't said it on the 21st and the 30th we deposit money in the bank. If this wasn't there, basically. Make sense? Cool. Right. So let's go on now. Down to the 21st. On the 24th, we know we received rent income. So again, we didn't do anything to the bank. We recorded that. We recorded our output that. Okay. And then on the 26th, we received a check in part payment. You can see that was for debtors. Can you see debtors control? We used the amount inclusive of that. Can you see that? And can you see we didn't calculate output value? But don't we have output VAT on sales of trading inventory? Don't we? We do. So then why do we report output VAT, guys? Why aren't we reporting it? Okay, the questions for the whole classroom. Yes? And I welcome guesses, you guys know. Part payment, yes. In the back. Okay. Okay. Yes. So thank you for submitting. Is there anybody else? So she's saying the VAT was paid on the first part. This is the second or the third. Anybody else? Okay. Now, this is only recording the payment, the money you received. But you guys were actually on it. I was waiting for you to continue with that. I actually said the right thing. When we initially sold to this guy, we recorded it in the debtors journal. Because remember, he bought on credit. Because remember, they're saying on account. So when we initially sold to him, all right, it could have been for 40,000. Because remember, this is part payment. This is not the full amount. So let's just assume it was 40,000. We recorded that 40,000 in the debtors journal. And in the debtors journal, we said debtors control is affected, 40,000. And then we would have said output VAT, whatever that portion that is. And then obviously we had sales. And then we would have calculated costs. So can you see we recorded that in the debtors journal. So since we recorded that there, we don't need to record it here. We would actually then be duplicating what we've already done. So here you're only recording the fact that we are receiving money from a debtor. Make sense? Okay, right. And then what's the last one? Last one received 130, 10% settlement discount. Okay. So we know that we didn't receive the whole 130. We then now need to calculate what is 90%, because that's what we've received. And that's how we got the amount and the analysis of receipt. We also know that since it's the 30th, we deposited money on that day, okay? And therefore, we are gonna put an amount in the bank. Not just of the money we received on the 30th, but the money we received after the 21st to the 30th as well, okay? Right. Question 2.2. Oh, well, the second side of it is they wanted us to do the debtors journal. Okay? And there we only had 2 transactions, on the 12th and on the 19th. I'm sure now you're really seeing the value of why we say, let's find out which transaction goes where. All right? So there, okay, B. Solomon, okay, on the 12th. Okay, we gave him an 8% trade discount. Okay, so this amount less 8%. So that's going to give us 92% of that 40,000. Okay, and we get 37,000. We plug that into the debtors control. All right, and then we calculate the VAT on that 37,000. Okay, and then we have our sales, and then obviously we need to calculate cost of sales. Again, can you see? I'm using the same model. All right. Because they didn't tell me that these goods were on another markup or on gross margin or gross profit percentage. So we stick with that. Okay, then with D, received 10% settlement discount. Okay, we're only interested in the amount that we've done this transaction for. So again, we say 10% of this, 90% of this 130,000. And that's how we got the 112,000. I didn't do the calculation, but that's how we got it. Okay, and then we calculated that on that 112,000. And then the difference was the sales amount. Okay? And yeah, that was your question. That was your question. So then we move on to question 3. And that was our final question for 2016. And there, guys, I'm sitting on the aircraft now. You know, this might be the reason why you might get tired quickly also. Big thing on. Okay. Right, so let's go on to question 3. You see what's happening over there. Question 3, they said use the relevant totals from those given above to complete the posting of the journals to the following general ledger accounts at the end of March 2016. You need not balance the accounts at the end of the month. That is very nice. So they're giving you inventory, they're giving you input tax. Great, okay. They weren't so nice. And they don't usually give input tax. Alright, usually the ones they like to give or question you on in the general ledger: cost of sales, trading inventory, debtors control, creditors control, bank. Yeah, those are the ones you need to. So guys, practice that. Practice that. How should it look like? Okay. What do I write under details? All right, for these respective accounts. Okay, so trading inventory. As always, whenever we open the general ledger, see accounts, we ask ourselves, do we have a balance? Okay. So we didn't even read the whole question, we just went through the requirement. So here, up top, it says, you are the bookkeeper, all right, and the owner is Miss Ide. Okay, the business is a registered VAT vendor and trades only with registered VAT vendors that can provide tax invoices. The business charges 15% VAT. Let's just imagine. On all its sales, the business uses the perpetual inventory system and the markup of 100 on cost. Okay, markup of 100 on cost. Okay, remember I told you guys never associate any particular amount to any of these things. So if they tell you 100% on cost, what are they actually saying? What is our model going to look like? The answer is actually on the board. Okay, so yeah, your profit is obviously then 100, but that's your markup. Your cost is obviously 100 because what? They said on cost. Okay, and we know if they just tell you markup is 100%, but they don't tell you on cost or on selling price, we know. We then now need to go to the formula. Okay, just throwing that in there now, so on that subject matter. Then for selling price, look at it, it's 200%. Wow, can you imagine? All right, now if you're fixated on it, it should be about associating an amount to one of those three. You're gonna have problems because you're gonna say, no, it can't be. I must be making a mistake somewhere. Okay, and then you end up doing marks for another reason. But anyway, let's move on. Make use of source documents. You have recorded all the transactions correctly in the creditors journal, creditors allowance journal, cash book payments, general journal for the business for the month of March. The totals of the creditors journal, creditors allowance journal, cash book payments, general journal for the business for the month of March are as follows. The detailed transactions and other selected information have been omitted. Okay. All right. So here they're giving you the journals. You see? They're telling you, do you know how to post? Okay, we're doing the trading inventory. account first. So, in other words, we're paying attention to nothing else other than trading. So we look, okay, under the creditors journal, we have trading inventory, and we have the total there, 346,000. We know we need to use that, okay? Creditors allowance journal, 11,750. Cash book payments, 262. That was there. All right, and then finally in the general journal, can you see there? The owner did drawings, took out drawings. So that second transaction will be also recorded. Now here, we're testing you on the basics. Why do I say that? Because basically, you know, whenever you open your T account, whenever you look at any of these amounts that we've just seen in the journals, you're asking yourself one simple question. Is this going to increase my trading inventory or decrease my trading? Okay? So those principles we learned when we were doing the accounting equation, we're going to use them whenever we open the general journal. Okay? General ledger, sorry. So we've done that. Again, do we have an opening balance? I don't see an opening balance anywhere. Oh, it says they under the requirement, assume an opening balance of 68,920. So that's where we got our opening balance from. We plugged it in, okay, and there's either mark or two there. Alright? We throw that in, then we begin with now the journals. Okay, so here, creditors journal. What? This 346,000. Is it going to increase or decrease our trading inventory account? Now I know you're going to answer on the board, but please answer my question. Is it going to increase or decrease the trading inventory account? Increase. Why do you say increase? You are 100% right, by the way. It is going to increase the trading inventory account. But why are we saying it's going to increase? Now, the only way you can answer that question is if you understand what the creditors journal is all about. What is the creditors journal all about? What are we doing whenever we enter something into the creditors journal? We're buying on credit. So that means that we now have more trading inventory. Does that make sense? Because we were buying. Okay? So can you see what this is why I say it's all interconnected. If you don't understand your creditors journal, then you can't answer this. Okay? So since we know we're buying more trade, it's going to increase. And now we then ask you, okay, I now know it's going to increase, but then do I debit or do I credit? That's where you now have to ask yourself, what is trading inventory? Is it an asset? Is it a liability? What is this thing? We know it's an asset. So we know that it increases on the debit side and decreases on the credit side. Okay, we know it's increasing, so we're plugging in that 346 on the debit side. And then here at the folio, we're saying, okay, creditors journal. This was for the month of March. That's where the fee is coming from. Then here, can you see creditors control? Simple. And they obviously went away. Then we move to the next one. Okay? Creditors allowance journal. Is this going to increase or decrease my trading inventory account? Decrease. 100% right. Why do we say decrease? Because here we're returning goods or we're asking for a rebate. Alright? Rebate, what's the other one? Rebate return is the third one. Rebate return or we've been overcharged. Okay? Rebate return or we've been overcharged. So then we're saying this is going to reduce. So we're going to credit this time. And again, so yeah, again, creditors control, okay, because this is, remember, this is people that owed us, okay? So we're saying, okay, we're reducing what people have owed us. So in your creditors control, we're going to debit. Does that make sense? Okay. All right, and then CAJ, again, for the month of March, so then you throw in the amount there, 11,700. Okay. Then last one, cash payments journal. We're asking ourselves, is this going to increase my trading inventory account or decrease my trading inventory account? It's going to increase because what are we saying? we are buying again, but this time we're buying for cash. Okay, money was spent. So again, we're debiting, and then CPJ. So these are things we didn't spend so much time on, all right? But I'm hoping that through the exercise, I do know that the exercise I gave you work for you to post. So I hope you actually did that. Okay. And your book, I give it to them. You know, when I usually had a lot of criticisms towards the textbook and stuff. But here, when it comes to posting to the general ledger, sorry, they give good examples. Okay, so do use your textbook to see. All right, what am I supposed to actually be writing under details, and how should I be treating it? What should I put under the folio? Right. Then the other account they wanted us to do was input that. So again, we quickly check, is there an opening balance for input that? Did they give us one? In other words, there's no balance. Okay. Then we go to see, okay, where did we use the input that? Or where was the column included? And we see there in the creditors journal, there's that 48,440. It's going to increase the input that account. We have to ask ourselves, what were we doing in the creditors journal? Again, we were buying on credit. We know that that means that since we were buying for our inputs, it means that this is the amount that we can claim from SARS. And the money SARS needs to refund us. Does that make sense? And therefore you're going to the negatives. Because we know that input that again is a current asset. So again, it increases on the debit side, decreases on the credit side. Okay? Then we go to the next one. We have input that in the creditors allowance journal. Oh, we don't. Skip that one. Cash payments journal. Yes, we do. Okay? Again, same principle. We're buying, but this time we're paying cash for this. Okay? And so we know this is increasing our what we can claim from SARS. So we debit it. Okay. Right. Are there any questions in relation to this? Okay, so again, guys, please make sure that you're comfortable posting from the notes to the so that should be okay. To the posting from the journals to the general ledger. Okay, this time I got it right. So I see we have 15 more minutes towards the end of this session. I'm not going to go into any paper. Okay. Tomorrow I see you. We're going to be online. Okay. We're going to continue with those papers. So all I'm going to ask from you, because I'm assuming that you're already preparing for next week Wednesday, is please make sure that you download those past papers. So it means tomorrow in 2015, we'll see if we can do, we'll definitely do 2014 as well. And hopefully we can get 2013 also in. Okay? All right. You guys have 2018 and you have 2019 as well on the One BC Learn. Please make sure that you go through that. Okay? The more of you that you can do, the better for you. And what's great about the past papers is it shows you how they can ask the question. Okay? So please make sure you do revise them before you write. One second.